Good evening, good evening, good evening. So, back with another trade breakdown, which is going to be my trade from today. Um, just from listening back on the most recent videos, sometimes there seems to be a bit of like an issue with the audio. I think I may have fixed that now. Just like listening back, sometimes the first like minute or two will have like a bit of a like distortion or like white noise in the background. I think it was a noise gate. I think the noise gate was on and it was just a bit too strong. Um, and there was a bit of a frequency that would come and go, but I think I've may have fixed that issue, so hopefully we don't have that issue, going forward with the future videos. But just gonna break down my thoughts around today's trade, what I was looking for, and things like that. So if I just go to the daily time frame, let me just come out of replay. I'll go to the daily. Um, so this area here has been a major area of interest, reaction area. It was our structure on the daily time frame from when we broke out and we came back and tested that. And now we're at that area again today. We can see there on the 1st of July, we tapped into it, couldn't close below. Again, then yesterday, we had pushed down, tapped into it, couldn't close below. And right now, at what, coming on to 8 o'clock at night, it looks like we may close above. So again, failure to close below. So this is a significant area. And it's not really an area I want to be trading into. If I want to be selling, preferably I want to be below that. So if I just go to the 4 hour time frame, what I'm going to do is I'm just going to bring the replay tool and bring it back to um 6 a.m. because that's basically when my session starts. So at the time of me coming to the charts, having a look, we can kind of see that we've closed below that area, right? But this is on the 4 hour time frame. So when I'm looking at that area in terms of a daily close below would be a good sign for me that I can then look for this level to be rejected, on the next day, or 4 hours rejecting that and then continue to sell. However, at the time this morning, we've got two bearish 4 hours, which is a good sign. It's a bearish bias. We can see that we have been bearish for a little while now in terms of, intraday structure and things like that, creating lower highs, lower lows. And this 4 hour candle actually closed below the support that formed at 10 o'clock, basically the close of yesterday's daily candle. So that's a good sign for me. So, sort of sometimes when I see this sort of pattern just off the bat, what I want to see is price pull back in, respect this support, or price continue down and form a lower resistance, below this area, and then I can look to sell that. So that's just off that what I'm looking for. Now, what I've also got here is a 4 hour support. So although we have closed below the most recent support and we're below sort of like the daily resistance, from this zone to this next support is a 23 pips. And as we can see, we've had reaction, rejection off this area. So it is an area that I'm going to be paying attention to. Kind of like the next level below that I'm looking at is a 4 hour resistance, which we can see we have had reaction, rejection here. And of course, there might have been some here on a lower time frame. But that is the next area I'm looking at. So essentially what I have then is 23 pips to here, and then from there to there is 32 pips. So roughly like a 32, but potentially like a 50 pip in total. Now, when I'm thinking, well, what structure showing me, what's volume maybe telling me, um, they're the sort of areas I'm looking at for targets. So if I just drop the 30-minute time frame, this is what we're looking at on the 30-minute. Now, the most recent support is here. The most recent resistance is here. I'll just mark that up on a box, which is typically what I do. So this is the most recent support and resistance. So this 530, the 6 closed below, which is good. So we're below the most recent 30-minute support. We're below hourly support. We're below 4 hour support. Essentially, you could take this trade on this close and do that, target this or target this. However, for the first 30 minutes of the new 4-hour candle, I don't typically like to trade that, because I know the majority of my trades come between like 7 onwards. And I've had a bad experience of taking trades so early. Now, different times of the year it is different, because especially like now in the summertime, we're seeing a lot more volume, a lot more bigger candles, bigger moves. Um, so taking these trades early on in the year, January, February time, at this early into the session, typically for me isn't good. I typically tend to get caught in trades and things like that. So I didn't take the next 30-minute candle, and that's how the next 30-minute candle closed. So you can see that if you did take this as like a breakout trade, it makes sense from a structure perspective, and it does offer a good risk to reward to here, or at least it offers you a chance to get into a position and see what happens here. You can then look to manage or hold the trade or just get out of the trade. So it's definitely an option, but one that's just too early for me. And to be honest, I seen this and I was like, I'm not even paying attention, because I'm not like looking to actively trade that sort of candle. When I seen this close, I said to myself, well, I need to see some form of structure or some form of pause in the market. Now, what I like about this candle is it closes below the 4-hour support. Okay, so the next 30-minute candle actually closes below again, rejecting the support as resistance, which is quite good. So this is a little pause in the market. And if you go to the 50-minute time frame, you can see there's lower resistance, although it's not confirmed. And then on the 5-minute, you can see we have a lower resistance again from here and so on. So that's how price is moving. So at this point in time, I would say to myself, do you know what? It's coming up to 7 o'clock. Well, 7 a.m. Usually between 7 and 8 is pre-London. You may have a bit of volume and so on. And we can see that price has actually printed two big candles. So these two candles from 5:30 is basically 60 pips. So there is a bit of, I can see visually that price is moving down, and it doesn't really look like it wants to go up at the moment. To me, this is just a pause in the market for further downside. So what I done was I actually got involved here. Now you might be looking at this and saying, well, that doesn't look like a great risk reward, or it doesn't really look good. Why did you not get in at the lows? Essentially, I was a little bit late to this trade. Initially what I wanted to do was get in on the break of the lows, have my stop loss above that candle, and I was going to target this daily resistance because it's the next level down. Now this gives me basically a 1-to-1. So that's initially what I wanted to do. That was my plan. Okay. Now I just basically come back into my room this morning. Price started to push down, and I actually got in a little bit later. And as you can see, like from where I wanted to get in to where I get in was like 4 or 5 pips, but it was the difference between 1% and basically 0.5%. Now, if I just delete this, as we can see on the 15-minute time frame, this candle basically completed the move, and we broke the lows and we pushed down to this level. Now, volume's in the market at this time. Okay, so what I done was I was targeting here, and I was basically seeing if volume is going to maybe continue price, because looking at this visually, this push down, stall, and then volume push strong. I wanted to see if I could maximize a move. So from where I entered to where my target was, which was here, it was like 0.64, right? 0.6%. To where 0.5 is, it's only a couple of, maybe I'm just going to measure that. It's minuscule. It's only like, 5 pips, 4 pips, right? So what I done was, as we actually push below here, my target's here, in my head, and because volume's in the market, I want to see if I can maximize the move. Okay, so as price broke here and continued down, I just moved my stop loss to lock in 0.5, which is typically how I manage at the moment. So if price continues, and maybe just say, for example, price tanks the whole way down here, right? Then I can maximize that. But if price comes back, it's going to tap me out for how I would typically manage anyway. And especially between 0.5 and 0.64, there's only like 4 pips. So for the sake of that, I was happy to just move my stop there and lock in rather than just close at 169.85. Of course, if I had have get in here with my stops above, which was my original idea, I would have closed out because I got 1%. That's more than enough. So that is what I done, and price did push on, and then it came back and tapped me out, and then of course price flipped bullish, and we pushed on. So that was how I managed that trade. So it's basically just, in a volume push, there is opportunity there to potentially maximize the position. And then, but of course, once you see some form of rejection, basically in and around where you would typically, where the next level is or next zone you're targeting, you wanna act on that. So basically identifying that price was pushing strongly, I wanted to see if I could maximize a move, and it just didn't pay off. But again, I've only got myself to blame for me not getting in where I wanted to get in, 5 pips higher. But that's fine. I'm happy with this trade. I'm happy I was able to lock in 0.5%. That's now 2 trades for July, 2 winning trades, up 1%. So just kind of continuing on the good form from June. But that is that trade breakdown, that explanation. And if I just kind of continue with what's occurred, even if you didn't get in this trade, your session best is bearish, this just becomes a target. So any pullback and resistance formed, you're going to be selling down to your target, because essentially what this is just the wick creation on the new 4-hour candle to then continue down, because your bias is bearish, you're moving down in the market. So if I didn't get in this trade, my next trade would have been, or my trade would have been this, and I would have been entering here, targeting the 4-hour support, which is where our target formed on the 30-minute, basically in and around that. And as you can see, that would have come in for a nice 1.43%. So in taking this early option earlier on in the session, you can see how, if you didn't get involved in that trade, or you weren't at the chart at that time, how you could have just waited, and once you get your lower resistance, you take your sell. Although we have closed above the most recent support and resistance, that doesn't really matter, because you're trading based on your bias. Well, that's how I would trade anyway. So my session bias is bearish. I'm basically waiting for a structure resistance, and I'm trading that in line with my bias, and that came in pretty nicely before price did end up continuing further, and is now currently here. So that is my trade breakdown for today. 0.5% locked in. Could have been a lot better with the entry, but that's just my fault for not being at the charts, buying on when price was moving. I did notice it, and I was kind of getting to the chart, but I get in where I did. But managed how I currently manage, based on my data, and it's working out well. So that's my trade breakdown for the 6th of July. 0.5%, 2 trades this month, 2 wins. Continuing on from the good month of June. But any questions or queries in relation to this trade management, just drop a comment. I appreciate if you do watch the video, and of course, subscribe to the channel if you don't already. It goes a long way. And like the videos and stuff. So appreciate it. Thank you.